The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Mike in Wilmington. Hey, Mike, what's going on?
Hey, Tommy. How you doing, buddy?
I'm doing great, man. Yourself?
Good, pal. Good. You have called to give you a compliment because I just want your listeners to know that you are on your game right now. I've been listening to you for a lot of years, Tom, and you are on your game. And I'll tell you, I'll never forget you calling King Dollar back when it was in the 70s. You saying it was going here, and everybody couldn't even believe that it could even dream that it was ever going to go back to the 90s.
I appreciate the feedback, man.
All right, pal.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. To master love, you have to practice love. The art of relationship is a whole mastery. The only way to reach mastery is with practice. To master a relationship is therefore about action. It's not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials up 130, NASDAQ up 45, S&P's up 12, gold contract down $13, trading at $1,331 an ounce. Silver up 38 cents at $19.28 an ounce. Platinum down $13 at $1,026 an ounce. Light sweet crude down $1.27, $44.66 a barrel. Bonds, the 10-year note up 6 ticks, 131.16. 30-year bond up a full point, 7 ticks, 169.15. King dollar up 100 ticks, 95.31. The euro is trading at $1.12, and the yen is at 100.29. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, you're going to love this market, folks. Volatility continues. So, your SPY right now is trading up $1.27. The top of the gap from the gap down yesterday is $215.88. We made $215.68. You couldn't even make it to the gap, number one. What I suspect you're going to probably see here is we're going to probably close under $215.23. If we go take a look at the actual futures, this is where it's going to get really, well, the NQs. We'll get into the NQs in a second. So if we take a look at the future market, the E-minis, what you have is this, is that the high that was established last night came in at 2154. We hit we got all the way down to 2132 at the open this morning. We come all the way back up, and we hit 2154 once again. We'll see if this market can actually hold higher price. My take is that more than likely we're going to see it come down probably about to 2147, 2145. Instead of being up 12 points, it'll be up around 6. That is inside the Dow, inside the NASDAQ futures. That would constitute a failure on price, failure on volume. NDX 100, different ballgame. So the NQs and the NASDAQ composite came inside the range they broke out from yesterday. Well, they're right back outside it. Any close above the $118 in the Qs, guess what? You can go hit that high again. Inside the composite, what we have, the composite right now is trading up $46. Any close over the 52.75, and right now you're 28 points over it. The saying it wants to go after the highs once again. Gold contract, what do we have with gold? Gold contract is down $13. You've done 173,000 contracts. Correlation, yesterday didn't have buyers. Was try to get to a higher high. You had 127,000 contracts. You're coming down at 173. This, I suspect, is going to go after its last swing low, which is 1309. And the way that this has been trading, it looks to me like a building cause to get into this breakout area from a Brexit, which is the 1259 area. What the gold contract and the silver contract, what they both had done, they haven't been able to take a swing high out, and they've had two really good shots at it. They had the shot on the 2nd and the 6th of September, big time. They had the shot of it just last week because in all those cases, they had the wide price spread. They had a good expansion of volume, but they couldn't get to their swing high. And the swing highs, folks, are where markets talk, walk, and squawk. Let's go over and take a look at the 10-year. So 10-year out here right now, you're up 7 ticks. You've done 1 million contracts. The swing point that it has gone after is 131.18. You hit 131.21 today. Bottom line, we'll see whether it can hold the 131.14 level. The volume's not bad. It's still light. It's light by a couple 100,000 contracts right now, but it did get back up to 1 million contracts. You close under the 131.14 today, it won't get 200,000 contracts coming into the next hour. That would be a failure. On price and on volume, that would send the 10-year back down the other side. The 30-year has price spread, no volume though. The 30 is going at the 345,000 contracts. The high of that is 171.09. The low is 169 and 03, 168.03 rather. Right now we're right into it, so we'll see if in fact it can hang over the 169 level as we come into the close. Right now it looks like it will do that, and we'll see whether it can get up and test the top of that. And I don't expect it's going to, and the reason being, folks, is that intraday out here, you had the downdraft happen inside the 30-year, and I expect what you're going to see more pressure on the 30-year as we come into this close. King dollar. What do we have with King dollar? King dollar, volatility, by the way, is all over the place out here. King dollar had got to a high today of 95.58. Right now, you're at 95.31. It needs more volume. The volume's not bad, 13,000, but really, you got a sideways move out here. Yesterday, you did reject lower price, and you only had 10,000. Today, you're going. It was up 300 ticks. Now you're only up 100, which is better than being down. Bottom line, that's building cause, but the dollar is going to need more wide price spread, accelerated volume in order to get up into these higher swing points. We go take a look at the silver contract. What we have with silver contract is coming down hard, and it looks like these things are setting up that they're going to go after the swing lows tomorrow. Silver has 63,000 contracts. Those 63,000 contracts coming after. See, the last swing lows out here, we didn't have a lot of contracts. You had like 42,000 contracts. Well, we did have 82,000 on, on the 12th. On the 12th of September. Then I tested it with 44. You're coming into this with 63,000. So you're coming in hot inside the silver market as this is making its way down into lower price. Our phone number is 877-927-6648. What I do expect you're going to see, as I said just a little bit earlier, as we come into this close out here, the volatility is going to continue, and I expect inside the S&P you're going to see it sell off about 6 points. And that's all it's going to take, by the way, is 6 points to have another failure on price, on volume, inside the S&P, inside the Dow Industrials. Dow right now is up 121, NASDAQ is up 43, S&Ps are up 11. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials up 123, Nasdaq's up 43, S&Ps are up 11. Now let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the first hour. And don't forget, folks, Basil has a great program on TFNN every trading day, 11 to 12 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, the way that you can test drive The Opening Call, you come over to TFNN, go to newsletters, go to trading newsletters. You can test drive The Opening Call 30 days, absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
Very well, thank you.
Cool. So, I believe we got the Dow up here, right?
This is the Dow. On the left is the daily, in the middle is the weekly, and on the right is the monthly. These are the charts, and what we're looking at is so fascinating. We're looking at the Dow right now. It made a high on August the 15th at 18,688.
Okay.
It's come down in a pattern. I'll just talk about this pattern briefly because this is a pattern we might be seeing a lot more of. So in my Chapman Wave, introducing the Chapman Wave CD available at TFNN, I've got a chapter, I believe it's 17. I'll go there right now. And that talks about the pattern called the dreaded H. It looks like a lowercase h. And what happens is when the left side is tested after a bounce and it breaks the left side, you can keep going down. Not you, the price can keep going down.
Yeah.
And that can happen quite a bit until eventually it makes a larger pattern. Could even make something that I call the lowercase m pattern. So we're seeing this at the particular moment in the Dow where you've got these series of left side tests and it keeps breaking. Now you've got a rather large arch formation. So for my subscribers, we are short the Dow, but what's most important about this, it's so fascinating when you look at charts and you look at all the different time frames, you can go from a very poor technical picture to a not bad to a very good one, just looking at different time frames. What I'm going to do is I'm taking this chart, I'm expanding it, I'm pulling it across. Let me just grab it over there. And all of a sudden you can see basically what we've done. We've taken since the middle of May, and here we are at the end of September, over 6 weeks later, And the Dow has basically only gone down about 700 points. So it's used a lot of time. But here's that pattern that I'm looking at, that arch formation. So for me, it's very clear. A closed below in the Dow, below 17,900, means immediately that this 200-period exponential moving average, which we haven't even touched since we broke out above it back in June the 29th. This is that orange coral color, thick line. At 17,852 becomes a target. So I'm looking at this, and I must say, just in terms of patterns that repeat over and over, the best case I can see is that there might be a little bit of a rally in the Dow, and that would be based on, now this is the daily, remember, looking at the QQQ, that's the NDX 100, there's an unfulfilled, in the Chapman wave, we're always looking for at least 4 peaks, and that's where we start to look for some kind of a conclusion. Well, you can see that we've gone to a peak C in the QQQ series in the daily chart at 119.22. This big move up today suggests that there could be another bounce in the next day or two just to get to the 119.23 to get to D. That will continue the D in the weekly chart. So as I'm putting this together, this is my conclusion, that there's still a little room to move higher in the Dow and the S&P. Both of them are weaker than the QQQ series, and that also goes together with the SMHs, which is the semiconductor, the market vector semiconductor, which also needs its leg D. I spoke to you, I think it was last week, Thursday, and I was saying that I'm still expecting that leg D, and it looked like we could never do it because the Dow and everything fell quite sharply, and all of a sudden you got this big move up today. So I'm saying this, enough residual strength to say there could be another bounce. But if I'm looking at my weekly charts, and this is the thing that really concerns me, yes, we've had this high-level consolidation, but the MACD is very weak. The stochastic's now down at 70%. It's under the 80% level that I like. So, and it's under the 9-period exponential moving average of 18,264. We're at 18,211 right now. Yes, you could bounce, but the way it's looking, I think we're looking at going into middle of October, we could see lower lows and lower highs. That's the way I'm looking at it. It would really take a move in the Dow to cross 18,500. That's quite a way to go, over 300 points. And in the S&P, the equivalent would be, so that's, and you just get that right now. Yeah, and the S&P needs, it's at 2157. It would need the 2186 area to really recover and say, okay, high-level consolidation, using time, not price. But when I look at my key stocks, GE, IBM, Triple M, and UTX, they're not giving good signs in the weekly charts. And that suggests to me that we've got a choppy, slightly lower highs, slightly lower lows. I believe the Fed is still there trying to keep whatever they do, they're trying to keep things buoyant, at least for another couple of weeks going into the election.
I guess trend-wise, it looks like the Dow and the S&P, bottom line, the trend isn't up anymore, but the NASDAQ is, right? I'm just asking.
No, well, the question is, if we're looking at the monthly charts for me are still looking really good. Okay. I've still only got leg B in the monthly, S&P.
I see.
That doesn't mean to say you couldn't have a pretty decent pullback because, 2157 in the S&P, the 9-period moving average is at 2107. So that's, that's 500 points in the Dow, 50 points in the S&P. There's room to pull back. There's just no question. This is a period where most of the time, somehow or other, I don't want to say it's Fed-related, but somehow or other, the market manages to hold up. Remember, in 2008, it was really important that we held key support levels, and then the market ran into the election, the last week and a half of the election. So there's something going on there that is supporting. Technically, I would have thought that the Dow, if there wasn't this way of propping it up, and of course, bonds running in a sense is helping it a little bit, but there are a lot of stocks that are very important and they are weak. I went through a couple of dozen of the IBD, the top 50. I went through maybe 25 of them over the weekend in all time frames. Majority of them are really quite extended. So I think the upside is limited at this particular point. I am looking later in the year for higher highs, but I think this is a very important consolidation period. So for my subscribers, we have a mixed portfolio. We have some longs, we have some shorts, and that's the way I'm looking at it. I'm going for individual stocks, and in the key key indices. For the Dow right now, we are short.
And folks, if you come over to our website at TFNN, you can go to newsletters, go to trading newsletters. You can hit the opening call, test drive Basil's newsletter, 30 days absolutely free. And of course, don't forget, every trading day here, 11 to 12 Eastern Standard Time. Basil, you can call him up, talk to him right on your cell phone. You go to TFNN.com, hit Tiger TV, folks. And the fall's kicking into Boston. I heard it's pretty nice up there right now, right?
Today is a beautiful day. Yeah. Yesterday was quite cold. Today is beautiful. But, yeah, you never, this is, the end of the summer is here. There's no question about it. These are bonus days. Oh, by the way, tomorrow for anyone, for the Tiger technicians out, I'll spend a little time talking about the volatility index, the VIX, what I'm expecting, how it's going to react, and what levels we'd be looking at. And you can correlate those levels to where the S&P and the Dow could be next week.
Right here at TFNN, folks. Basil, you have a great night, a safe night. Of course, we look forward to the program tomorrow.
Thank you very much, Tom. Have a great evening.
Thank you. Stay right there, folks. We'll be coming right back. Dow right now is up 116. We get the NASDAQ up 40. S&Ps are up 10. And, we'll see if we get another 4 points down on the S&P futures, which I expect we're going to see coming into this close. Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 112. We get the NASDAQ up 40. S&Ps are up 10. If we take a look at the strength and the weakness inside the indices, this is what you have. Strength inside the Dow Industrials is Microsoft. That's up 1.6%. There's only one stock inside the Dow that is in the negative right now. Now, this is pretty cool, folks, because the Dow, right now is up, let's see. So the Dow is up 0.6%, and you only have one stock that is negative. That is not a good indication, folks, because what happens is that means that you do have Dow stocks that are up, and they're putting a little juice into it, but guess what? Not enough. So Microsoft is kicking some good juice in. That's up 1.6%. IBM's up 1.5. Nike's up 1.5. Nike's coming out with the numbers after the close. American Express is up 1.5. Inside the NDX 100, what do we have inside the NDX 100? The strength inside the NDX 100 is Regeneron is up 4%, $16. Let me look at this one. Is this coming over a swing? Yeah, that's got juice in it. That's definitely got juice in it, but you are coming into the downdraft. Let's see. So, yeah, well, the volume's not bad. The volume's good. We're doing 244,000 versus 194 as we're coming into this 424 level. So that is good volume as you're getting into it. Micron Tech. Micron is up 3.7%. You have TripAdvisor up 3.25%, and Expedia is up 3.4%. Taking away from it, on the way down, we have Gilead down 1.9%, Tesla's off 1.7%, Amgen is down 1.4%, and you have Whole Foods down 0.8%. After the close out here, we're going to have Nike come out with numbers. That's 4:15, I believe. 4:15. So Nike is up 84 cents right now, trading at a price point of $55.26. Now, this is going to be cool watching this shake out because Nike will give us an idea of what some of the large international retailers are doing. Well, they're really a wholesaler, but they sell into that retail line. So this is what it's done thus far today. You've come into where it has a downdraft that was out there from the 1st of July. Now, the high of that is $55.81. Right now, you're at $55.27. And I suspect it's going to try to test the lower level of this because you get a high volume swing low. So it's going to be cool watching this shake out. The reason being is that Nike has been all of the above a powerhouse. I mean, big time. You know what I mean? You're talking about an equity that was traded in 2009 at $9.56. It runs all the way up to $68. Nothing can go up forever. Nothing's going to go down forever. But what you do have is that you come off that high, and we had some volume as we come off that high. So if, in fact, Nike does test this low, and we'll know at 4:15 where that's going to go. Because what Nike likes to do, folks, is either pop higher, 3 or 4 points, or lower. I mean, that's, I suspect the numbers are going to be good. I don't see them being a disaster. What I do expect is that they may be a little bit lower, but I believe that more than likely they probably took into account, with Sports Authority going BK, with a few of these other stores going out of business, that they're going to sell a little bit less. Bottom line, we'll see where this shakes out. If Nike goes after that low out there, we're going to see more selling pressure in the retailers and in the market in general. The dollar index is hanging up there. CTIS, this is all Cintas. Is it Cintas? Oh, one second. CTAS, yeah. So this one's going to be a good indication. This is up 25 cents. They're coming out with their numbers after the market. They didn't say what time after the market. This is a restroom supplies, uniforms, fire protection, great company. This also has been a company that has been printing money in a big way. That being said, I believe this was, Now, what this equity did is this, and this is going to be a great heads up on this equity. This equity just finished up a very large ABC structure on the way up. Now, when you finish ABC structures, folks, and we're talking about, let me see if I bring this back. I think I did this yesterday. I think that's the structure, 55, 40 bucks. Yeah. So this structure started in April of 2014. When you have a structure that is that long, it's almost no matter what they have to say, most times you're going to see a pullback in the equity because that is a long time run. You finish the ABC structure on the way up. Most times what you see is this. You'll get a pullback. It will pull back to many times where either it broke out from last time or a higher breakout level. And in this case, you get like $97. It'll pull back into that area, and it very well could be setting another ABC structure up. So when equities do long-term ABC structures, whether they're on the way up or the way down, you really want to keep an eye on them because they have the chance to do multiple ABCs. And the only reason that they're actually pulling back is that the extension was just so far. That's kind of how it shakes out. Some of the higher volume stocks in this market, it looks that we are going to have low volume market once again. You have Bank of America up 20 cents. You have Procter & Gamble up 32 cents. Whiting Petroleum is down 27. Rice Energy is off $2. You have GE down up 30. GE's up 36 cents. Let's go over and take a look at GE. So General Electric has almost tested its swing low. The swing low in General Electric is $29.17. We hit $29.47 today. And this is where you want to keep your eye on the correlation of how we come into this area. The reason being is that if GE gets back inside $28, and that's big trouble because GE's been outside of $28 since October of 2015. So you're talking about almost a full year. That's when it went topside, and it had some good juice as it traded topside. You get back inside that area, and that's not going to be a good deal. The Boeing. Let's go over and take a look at Boeing. What we have with Boeing. Boeing continues in its consolidation. This has been a consolidation for quite a while. That being said, this also has a high volume swing low at 102. So that 102 area is an area that you want to also keep your eye on. We go take a look at Microsoft. Microsoft is laying out here at highs, $57.90, and anything that it stays over the $56, that's in a higher range. So we'll see if, in fact, Microsoft can hold that level up there. There's quite a bit of selling up at these higher levels, folks. That's how it seems that when we're looking at the S&P, that's what you have, and you have it on a continual basis. If we go into the XLE out here today, it's down 46 cents. You're coming into a swing low. The swing low that we're talking about is from August 2nd. That swing low is $64.57. I expect that's going to get tested. But we hit a low today of $64.14. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. You get 20 minutes coming into the close, and we have the Dow Industrials up 115, Nasdaq's up 41, S&Ps are up 10. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are up 124. You get the NASDAQ up 45. S&Ps are up 11. And percentage-wise, we have the Dow up 0.7%. The S&P is up 0.5. NASDAQ is up 0.8. And the NASDAQ looks like it's going to hold out here. One of the ironic deals happening inside the NASDAQ and in the Dow today is Cisco Systems. Cisco Systems, has been, it's at high. It's been doing pretty good. It's up 47 cents. And if you listen to the debate last night, it's pretty amazing the statement that Cisco comes out with today, because Cisco, folks, is going to plan to spend $4 billion in Mexico. And if you heard that debate last night, you can, Trump talking about, how much is getting spent in Mexico by our companies. This is going to be a wild one, because when you do break the Cisco, they came out. Actually, I'm not sure. It doesn't look like they came out with this themselves. Here it is. Because I just read the story, and what the story was saying is that the Cisco said. Okay, it's not that one. Let me get the story for you. I just. There it is. So Cisco Systems plans to spend $4 billion in Mexico over the next couple of years, upgrading its factories and increasing production through their contract manufacturers, a person with knowledge of the matter said. The biggest equipment maker that runs internet-based in San Jose, California, will announce plans Tuesday, said the person who's asked not to be identified, because the news isn't public yet. So bottom line is that that, I suspect, is going to give ammunition in the next debate. There's no doubt about that. We go take a look at the XAU and the HUI. The XAU right now is trading down $1.63. You're at 92.82, and it's going to get tricky here the next few days inside it. And the reason being is that you're coming into the lower swing, and you are coming into this lower swing with not an expansion of volume in the context of where we've been the last couple of days, but the last time that we were down into these levels, you had many days with really light volume at these swing points. So I do expect we're going to go after the swing point, and the swing point we're talking about is $90.30 inside the XAU. If we take a look at the Gold Bugs Index, the HUI, what we have inside the HUI, that's down $4, 228. And the way that is shaken out, that I suspect that the 223.51 is also going to get tested. And we'll see as they get into that area, you're going to get an expansion of volume. It's going to break down. The overall metals market, where my head's going with this, folks, is that you have the S&P and the NASDAQ that's weak right now. The S&P and the Dow that's weak. That, we'll see whether the dollar can continue going higher. My take is that it wants to go higher. The NASDAQ composite and the NDX, that's at highs. They would have to fail again. That's at highs. My take is that you're going to see this market continue to lower price. As the market goes to lower price, right now you have the Federal Reserve bottom line saying, and the market saying that rates in December are going to be going up. Right now, the probability of that using the Fed Fund futures is 53%. Okay? So that being said, I do expect that that's going to continue to keep selling pressure in our markets. That being said, guess what? If, in fact, that happens, and we have selling pressure in our markets, I can see the Fed balking once again. It's just like, because it's every downdraft in this market, whether it's the 0.8%, 1%, bottom line, it looks that market participants just can't stand it. And they look to the Fed once again for free money. And, we'll find out how that shakes out. Certainly what hasn't happened yet inside the Dow, and it was right there, in September 12th through the 18th, is getting back inside the lower range. Now, what we have out here today, if we go look at the diamonds, what you're going to see inside the diamonds is that you have a lower low, even though the diamonds are up, and you have volume. So when I look at the diamonds right now, it's like, oh, okay, you're going into the swing low. The swing low that we're talking about is $179.93. We made it to 180.24. You've done 3.4 million. Yesterday, when we were coming down, we only did 2.6. So to me, that is pushing a low with an expansion of volume. We'll see whether the Dow can get up. For the Dow to do anything, it has to just get up over $182.29. Hasn't been able to make it. I don't expect we're going to make it. And then, by the way, what you're going to have there if we don't make it is this. You're going to have the Dow and the S&P go into two separate gap areas from the way down. They're only small gaps, and fail both times. The first gap that we're talking about is when we gapped down on the 9th of September. Second gap was from yesterday. And that's pretty unique, folks, okay? Because you can make the case that if you like candlestick charting, if you like council charting, same deal. You have an island top that's laying out there, and it's a very large one, from July 14th going all the way over to September 9th. And the bigger the island, by the way, the more bearish it is. And then you got a little tiny one that was just established these last 3 days. And in both cases, thus far, the S&Ps and the Dow haven't been able to pierce those. Each and every time they come up to them, bottom line, they just give it up and give it up in spades. The Dow Industrials made it to 18,238 out here today. It would have to make it to 18,254. So it's going to be, after the close. After the close, Nike will affect the Dow. It won't affect the NDX 100. If we go over to the biotechs, the IBB is up $2.44 today. We'll see whether that can hold. What is putting big juice into that is Regeneron, but then taking it out, we have. I know I brought that up at the Amgen. Yeah, we have the Amgen and you have Gilead. Gilead. So the yin and yang is out there right now. Gilead's down $1.54. AMGN. Amgen is trading. Oh, this is a big one, man. Okay, so check this out. Amgen's down $2.27, but that's not the big point here. The big point is that volume's blowing out of it. You've done 3.9 million after making a high on Friday with 2.2. Yeah, this is... And Amgen is always a great one to watch. The reason being is that when you take a look at Amgen, you know, has been hanging at these highs for a long period of time. We're talking about October of 2014. We've been in the same place, you know. And, you know, it does have higher volume swing points, but the amount, the largeness of this consolidation, the width is huge. The bottom of it is about the 139 level. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 124. Nasdaq's up 45. S&Ps are up 11. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow right now is up 123. We get the Nasdaq up 46. S&Ps are up 11. And the way this market is set right now is that you're going to have the composite back just about at highs. It's not at highs, but in breakout area. You're going to have the NDX also in breakout area. And the bottom line, we'll wait another day and see where both of those want to go. That being said, you still have the S&Ps and the Dow without traction. That's kind of how this is setting up right now. So inside, let's go take a look at Apple, because Apple could throw something on the party. So Apple's still at highs. Apple's at $113. You know, it had a couple signs of strength last week. What we are doing is that we'll be coming into window dressing on Thursday too. So this market has a shot to go south once again tomorrow. It's going to be hard for this market to go south coming into Thursday and Friday. Last couple of days of the month, beginning of the next month, October 1st, hard to believe, but that's where we're at right now. And what that does do is that brings in natural buying. Natural buying specifically meaning that there's plenty of money that comes out of people's paychecks. There's plenty of IRA money that comes in. It gets into the accounts, and as it gets into accounts, they get the mutual fund industry folks will put it to work very quickly. The reason being is that they don't get paid. You're not going to get paid if the money's sitting in cash. The industry only gets paid when the money is put to work inside the marketplace, and that's why you see most of the time a positive bias. I've seen, no doubt, plenty of window breaking at when we're supposed to get window dressing, but most of the times, you do get a market that can edge up. If we go over and we take a look at Facebook, what we have with Facebook did come down when they were reporting that their advertising numbers were off. That was on Friday. We'll see if this gets back up into and over the gap. Right now, it's just over the gap right now, meaning 128, anything over 128.60, it's over the gap. We'll see if it's going to go, more than likely test this high again. The high that we're talking about on Facebook is 131. Intel, we go take a look at Intel. So the SMHs, have been strong out here. Intel is the largest weighting structure inside the SMHs. That's trading out at $37.18. That is challenging the high that was established out here in 2014. So if we take a look at this, what you're going to see, the high in 2014 is $37.90. Look at this, it's right at it. This is going to be wild watching this shake out. So let's see if we've hit it yet. Okay, so we haven't hit it yet. The high that the Intel has hit, it's trying to test this high. The volume, let's see, you're at 440 million versus 600 million. It's never going to make it. That's 160 million shares that you'd have to get in 3 days, because we only have 3 days left in this trading month, and Intel likes to do about 18 to 20 million a day. So what we don't have yet is this. So when you do a test, the bottom line is that a test is a test, meaning you have to hit the number. So we haven't hit the number yet. So if Intel does close up here, it's going to have another month of a shot to get up into this $37.90, because thus far, oh, no, we've hit it. Oh, this is going to be cool. So what this is going to do, folks, we hit it. This month, we hit $38.05. The high is $37.90. So where Intel closes this month is going to be a big deal, because it's not going to get the volume unless Intel's going to get taken over by someone, and we're going to get like 200 million shares tomorrow. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back with numbers from you with Cintas, Nike, Dow Industrials up 130, NASDAQ up 48, S&P's up 12. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day in the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of the relationship. There are two halves of every relationship, but you're only responsible for your half. It's not up to you to control the other. Respect the other, and there is always going to be peace in that relationship. Market-wise, let's take a look at it out here. We had the Dow Industrial close up 133, Nasdaq up 48, S&P's up 13, gold contract down $13.10, trading at $1,331 an ounce. Silver down 38 cents at $19.21 an ounce. Platinum off 14 bucks at $1,025 an ounce. Copper down 2.5 pennies at $2.17 a pound. Light sweet crude off 138, trading at $44.55 a barrel. Bonds, the 10-year note up 5 ticks, 131.15. 30-year bond up a full point, 7 ticks, 169.15. King dollar up 130 ticks, trading at 95.34. The euro is at $1.12, and the yen is at 100.36. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You have the SPY. SPY traded up $1.32. You're at 215.56, so you closed over the high of yesterday. We had gap down, and the bottom of that gap, folks, is $215.88. And because we closed over the high of yesterday, that's saying it's going to go at least after the gap, meaning 215.88. So you're approximately 32 cents above where we are right now. Today, the high was 215.68. Dow Industrials, same type of setup in the Dow. Bottom line, Dow gets over the high of yesterday, just barely, but it's over it, $133 up. The low that it wants to go after is 18,254, and right now we're at 18,228. The NDX 100, the 3Qs got back over where they broke out from this past week. Yesterday, you come back inside it. It failed. Bottom line, the Qs are at $118.50. Anything over $118, that's going to go after the high once again, which is $119.27. The NASDAQ Composite did the same. NASDAQ Composite was up 48 bucks. Anything over 5375, and right now you're at 5305, 5275. You're at 5305. That is saying that also is going to go test that high. Gold contract. What do we have with the gold contract? Gold contract had a price spread today of $1,344 was its high. $1,331 is the low. Closing low, that is. It went to $1,327, and you did have a expansion of volume. We did 175,000 contracts. That's versus yesterday, we were trying to go higher with 127,000. That's quite an expansion, folks, 50,000 contracts. That is saying that there's more selling pressure inside the gold market. I expect, number one, you're going to come down to the lowest swing point, which is the 1309, and I expect we're going to break it because this looks to me that it's been building costs for quite some time to get to the June 24th breakout area, which is that 1259 area. If we take a look at silver, you have the same setup in silver. Silver is always more volatile than gold, going up and going down. Silver is actually also given quite a bit of information out that it wants to go after its lowest swing point. Silver came down 38 cents today, 64,000 contracts. This is going to go after the $18.76. And with silver, I expect silver is going to go somewhere about the 1735 level. So you're talking a real number on the way down. Now, notes and bonds. This is where it's going to get a little tricky, but when you take a look at this, what you're going to see is that we failed in the 10-year today and the notes. And this is what we did. So the notes went up and tested 131.18 today. We got into that level, and you got to 131.21. You closed underneath it. Bottom line, volume-wise, not bad, but you need about 1.2 million contracts, and we did 1 million contracts. So we'll see if, in fact, it can keep traction above the 131.18. The 30-year also failed. The difference is that the 30-year, I expect more than likely we're going to see Yeah, this is gonna try to get up into the 171 area. You know, this has been. We went up a full point today and 6 ticks. You did 200,000 contracts. Now you're running into 330,000 contracts as well as 348,000 contracts. The thing that's pretty wild out here is this, and this is, I want you to wrap your head around this a little for the market, meaning market up, correlation, how these bonds are also up. The correlation is normally just the opposite. That has changed. And it's really subtle, and you know we'll see. You know if in fact that is how it's going to continue to trade. And when I say it's changing, most of the time when you have a market down, you get the bonds up. Well, yesterday, you know, we had the market down, bonds up slightly, but really failed. If we go over and take a look at the TLT, which is the 20-year plus bond ETF, what you're going to see is that you're coming into the downdraft. And you're coming into that downdraft with 9 million shares versus 14.3 million. And bottom line is that TLT, we're at 138.70. I think it's going to test the 139.27. But thus far, it looks like you're going to have a failure at that level. King dollar. What do we have with King dollar? Good old King dollar, folks. Sideways move out here again. It's trying to get higher, but it's going to need more price spread, and it's going to need more volume. What has happened on a continual basis with King dollar is that each and every time it tries to get sold down, the volume is anemic. You know, yesterday you had volume of only 10,000 contracts as it's trying to get the lower price. Didn't get into a lower swing point. Today you have 13,800 contracts. That's not enough to basically convincingly say that it wants higher price, even though it went a little bit higher. It was a sideways move. You know, we'll see how this shakes out, but to me, what it is saying is that you have two separate swings. One swing is the swing from August at laying out there at 96.21. It looks like that wants to get hit. The larger issue where I think wants to get hit is this 97.64, which was the July 25th swing high. This is Tom O'Brien. This is TFNN. You stay right there, folks, because we're going to be having Nike come out with numbers. Nike and Cintas. This is Tom O'Brien. This is TFNN. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD Direction's daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 133. NASDAQ was up 48. S&Ps are up 13. Nike just come out with numbers, and bottom line is that they blew away the numbers, their earnings per share. That being said, they're saying that future orders they're going to miss. The earnings per share number was 56 cents. They made 73 cents. And the headline right now is they're saying future orders are going to miss their estimate. Nike had closed out here at a price point of $55.34. That is trading at $53.04 right now. Cintas closed at $113.43. That is trading at $116.80. Numbers go like this. Let's see. So the estimate was 1.28 billion on gross revenue. First quarter gross revenue, they did 1.29. Earnings per share, they saw let's see, revenue. Earnings they saw, no, they see, okay, first quarter earnings per share was $1.26. So bottom line is that market doesn't like where Nike is going. They do like where Cintas is going. And where we're going right now, folks, is we're going over to see our man, Mr. Andy Heck. And don't forget, folks, every trading day, we start programming, well, Monday, Wednesday, Friday. We do live programming from 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, we start at 7 o'clock in the morning, go to 6 in the afternoon. Andy has a great show every Tuesday, Thursday, 5 to 6 Eastern Standard Time. As soon as my program ends, he kicks it up. And no matter where you are right now, so if you're on the East Coast, listening in your car radio, if you're on the West Coast, if you're in the middle of the country, remember that you can get us 24 hours a day right on your cell phone. You go to TFNN.com, you hit Tiger TV, you're going to get some great HD quality video as well as audio. Andy Heck, what's going on?
Hey, Tom, how are you?
How you doing?
I'm doing good. How are you?
I'm doing good, man.
That's good.
Did you get your popcorn?
I did not.
My God! And
that's all right. I'll have it for the next one. Don't worry. I'm sure it's coming. It's,
that's not. Well, you know what? We get the tracking number, man.
Okay. We're on the other side of the globe. But I did eat popcorn. I did have a reserve bag.
It was guaranteed by yesterday, man. I got to find out what's going on. But that's a bummer.
Thank you anyway. But it was, it was what it was. I don't think it changed any minds, really. But it was interesting, no question about it. And the next two, I think that it's going to build to a crescendo. I think that the next one's going to be a little hotter, and the last one's going to be very hot.
Well, you know what? I tell you, I was surprised that listening to it, right, after it was over, and I was flipping back between CNN and Fox folks, so I want to see what both sides were saying.
Oh, that's classic, because you get two totally different. It's like watching two different shows.
Right, but they were both saying that Trump blew her away. I mean, Clinton blew him away, and I didn't see that, man. And let me tell you, folks, I'm not for Trump, okay? So, when I was looking at it, I was saying to myself, I didn't see that. So I'm trying to figure out, what did they see that I didn't see?
She comes across, she knows her subject matter. There's no question about that. From my perspective, I think that he had a lot of avenues. He got a lot of softballs that he didn't take advantage of. And he was sniffling a lot. So I think he has a cold or the flu or something. And I think that might have been a problem for him last night. So who knows? All I know is they're saying today that she blew him away, but I don't think it's going to change any votes. This country's so divided that people who are for him are for him.
I agree. I am not.
And by the way, I think the third-party candidates, they take more votes from her than him.
Oh, I know. Oh, listen, we got a race out here, man. That's
we got a race. We got a horse race.
We got a horse race.
No question. So the big thing I think this week, Tom, is Friday, because the stock market. I think coming into the election's 6 weeks from today, right?
Is it 6 weeks from today? Okay.
6 weeks from today.
Wow.
So we're going to have a lot of volatility in markets. No question about it. I think that this is a great time this week to lighten up on stocks because Friday is Q-end.
Yeah.
And they're going to mark those stock prices up this week because the fund managers want to get paid and they want their clients to get nice statements at the end of the third quarter. And I think you're going to see a lot of goosing in the market. So it's a great time to take some risk off the books in the equity market this week, my opinion.
That'll be interesting to see. I was talking in the last segment, Andy, last hour rather. Most of the time, what you have folks at the end of the quarter, last 2 days of the quarter, first 2 days, you get window dressing, and it's an upward bias. But I've seen some window breaking at that area too. So, if in fact they get out too early, that's what you'll get. Meaning,
Yeah. Well, we'll see. We'll see what happens. I mean, oil seems to be. Look, oil is kind of like the Fed deal last week. Hey, everyone knew that the Fed wasn't going to raise rates. At least 8 out of 10 people knew. And they didn't. And, markets are kind of sedate after the Fed move. Oil, everyone knows nothing's coming out of Algeria.
Yeah.
And, all right, oil's down today. It was up Friday. It's down today.
I know. No, every day it's moving $1.50, either up or down.
Yeah, these are markets for trading, not for investing. Really, really scary. Unless a market has real fundamentals behind it. A market like sugar, there's fundamentals behind that. And the
fundamentals behind sugar. Now, is that because of the drought in Brazil?
Well, yeah, there's a deficit overall in the world. There's more sugar demand than there are supplies.
Sugar right now, folks, is trading at 23 cents a pound, which is just in the last 5 months, it's gone from 15 cents to 23. So that's a monster
and
move.
In the last year, it's gone from 10 to 23.
Wow.
So that's a monster.
Yeah.
And you know what? OJ, baby. OJ, well over 2 cents today. Traded up to almost 2.10.
And so Brazil's really getting hit, right? So Brazil's
got weather problems.
Is it a drought problem?
I'm not sure exactly what the weather situation is, but I know that their crop production is not. It started with soybeans. It's gone to sugar. It's in coffee.
Wow.
There's something going on there that I'll have to look it up. But it's I would imagine it's dry weather. I don't think it's flooding.
No, those are big numbers, folks. When you take a look at it, orange juice is up 80% too.
Right. So you gotta kind of keep your eyes on the ball here. But the other markets are trading markets. I mean, when they look ugly, you buy them. When they look great, you sell them. And that's all there is here. There's not a lot going on. That's there's the one thing that's for sure is there's an uncertainty in markets. So that's going to drive gold and silver. I don't like the action in gold and silver here, but they seem to go down, then they come back. There's not a hell of a lot of anything. The only precious metal that's up today is palladium, which is kind of surprising.
Yeah.
The base metals are all hanging in there. Copper's hanging in there at 217. Taking a look at natural gas, that market is kind of hovering at $3 here as we go through the contract roll. Very interesting.
So we have oil numbers tomorrow at 10:30.
Yep.
Gas is going to be 10:30 on Thursday. Stay right there, okay?
Sure.
You stay right there, folks. Andy and I are going to be coming right back. Dow right now finished up 133. NASDAQ was up 48 after the close out here. You had Nike come out with numbers. Nike is trading down a couple dollars. Cintas come out with numbers. That's trading up a couple dollars. We're going to be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. And, folks, Andy's got a great newsletter, the Technomental Commodity Report. You can come over to our website right now and test drive it. You go to TFNN, go to newsletters. You're going to go to trading newsletters. You can test drive it 30 days, absolutely free. And, you know, we talk futures out here, folks, but always remember that inside the futures market now, they have ETFs that you can trade, that Andy does trade in the equity market for each and every future. Hey, listen, let me switch gears into just for a second, because you know what I saw, and I know you know this, but they had more information about it coming out this week, which was pretty cool, is that large banks, you know, since Glass-Steagall went south, and I guess that's about 15 years ago now, have been able to buy and trade physical commodities.
Yes.
And what has happened is that inside that Dodd-Frank bill, they can still do that, but the amount of cash that they have to put up on their balance sheets in the bank got extraordinary, so they're pulling back in that.
Right. No leverage allowed.
Exactly. And so it was really, and now I guess what is also happening is that now Goldman and Morgan Stanley, I guess those are two of the biggest ones, but now they're pulling back even more.
Right.
On that physical commodity. That's pretty cool for all us folks that trade commodities, don't you think?
Well, I think it's pretty cool. I think it's not that good for the United States because what it's done is all the regulation has forced all this business offshore, and now it's kind of controlled in Switzerland and in Asia, and Asian markets, and it's China's a big player. At least with the U.S. banks in it, the U.S. government had some, a little mirror into a little window into the flows of physical commodities around the world outside of the United States. And I think that window closes a little bit.
Yeah.
And I think that's probably frustrating for the CIA and other agencies in the U.S. Tom, one of the most interesting things I learned about commodities when I first started out in the early 80s was that the government, governments around the world really keep track of raw material flows.
Okay.
It's really, really important.
That makes sense.
It tells you a lot about how much various raw materials other countries have, and it tells you also a lot about the revenue flows of big producers. And who are the big producers? Russia, Brazil, Venezuela,
Australia,
all the Middle Eastern countries, Australia, China. And when we move the trading away from our shores, we give up a lot of that information. So there is the blessing is the volatility and the trading and the moving around. We might not see it, and it might make the markets more volatile and more tradable. But it also hurts us from a strategic point of view here. The only real big commodity trading companies in the U.S. are Cargill and Cargill, and Cargill is a private company.
So let me ask you this: years ago, like when you first started in the business, who were the big trading companies, and were they? I mean, because wasn't Mark Rich always a big one here? That was always Switzerland, right?
It was Philip Brothers because he worked for Philip Brothers.
Okay, and that was a U.S. company?
Yes, a U.S.-based company, Engelhard. There was J. Aaron, which
I remember that.
Is now Goldman Sachs.
And that's right. That's who Paulson worked for. He was a gold trader, right? Yeah.
Right. Blankfein.
Blankfein, yeah, right. Blankfein. That's right.
Right. And there were other U.S.-based companies that were big. It was spread out. There was Swiss companies, sure. There were companies in London like Mattel, German companies like Mattel Gesellschaft, French companies like Sukden. But these companies still exist.
Right.
So Sukden and all these companies. The U.S. companies don't exist anymore.
Okay.
So it's very interesting, and it's kind of like the ebbs and flows. I did read through that piece on the Dodd-Frank, and the leverage is unbelievable. I mean, basically, if you want to buy an aluminum storage facility, you got to post dollar for dollar. No bank's going to do that. There's no profits in that business.
Right.
Without leverage.
Right. Well, because in that specific aluminum business, folks, they were accused of moving around the same aluminum all over the place, making like it was a shortage, and
Yeah, so you think that's going to disappear? So you think Glencore's not going to do that?
No. But that was what my original question actually was.
Right.
And that was my question. Does that make not aluminum? We don't trade aluminum, but certainly J.P. Morgan has been accused a million times of, basically shorting the silver market that, you never could cover the short position, man. Do you know what I mean? So.
Right. I think that it's not going to get rid of the abuses. It might get rid of the abuses here in the U.S., but it might exacerbate them because we won't see where they're coming from.
Yeah.
And we won't be able to do anything about them. And at the end of the day, these raw material markets, hey, stocks, bonds, currencies, they're all beautiful things to trade and stuff, but they're paper. When you want to sit down at the dinner table and eat grains or eat a steak or buy copper piping or fill your car with gasoline, hey, these are the staples.
Well, there's a great story, folks, on Bloomberg. You can Google Bloomberg, and I read this yesterday, Andy, and I'm sure you know this, but this is amazing. So, in the iron ore business, folks, right, that China was buying so much iron ore off Australia that it didn't matter if you were a body that could move. You could get to Australia, and the minimum that you'd be making is $275,000 to $300,000 a year as a shovel operator. Mm-hmm. Okay, and the bottom line, that business went on, and then the bottom fell out, And in one day, what this article is about, folks, is this. A whole city got built. This was going on for 9 or 10 years. And in one day, that BHE Bulletin called everyone in from the fields, folks. So picture, it seems, reading the article, that this field goes out for like miles and miles. Called everyone in, and they were used to getting called in, but they called them in. They had planes at the strip, said, that's it, it's over, and that was the end of the whole deal. And the whole city collapsed.
Well, I mean, didn't similar things happen up in North Dakota and places like that with the shale oil?
I guess it did. No, that makes sense.
The whole economies fell apart. So, hey, it's boom and bust. Listen, Texas has been a boom and bust state forever on the back of oil.
No, yeah, I know. It just when reading the story, it was like, oh my God, how do you go from that? Do you know what I mean?
But meanwhile, it's very interesting. So meanwhile, that whole thing is busted, right?
Yeah.
But the Baltic Dry Index has moved from 290 on February 11th.
Okay.
It's over 900. And that's telling me, hey, dry bulk commodities are moving around the world.
Yeah, which is great.
And China is involved. No question. They're buying. They're definitely buying dry bulk goods. So, and that's coming from Australia, it's coming from South America, it's coming from, and hey, we talked about it last week. Last week, the Chinese bought Wellard, which is the largest Australian, they bought 17%, but believe me, they'll be buying more. The largest Australian cattle exporter.
Really? Yeah,
just
that's
like
right.
they bought Smithfield here.
Okay.
So, the Chinese are buying dips in these markets. And which market's under big pressure now? Cattle.
Yeah.
So you look, that's where the Chinese are. They're smart. They buy cheap.
Yeah, pretty wild. Unreal. Well, listen, man, we look forward to the show at 5 o'clock. Let the voice get a little rest here. And we really appreciate you growling problem with us. Okay, man.
Okay, Tom.
Have a great one. Have a safe one. Andy's going to be coming up 5 to 6, folks. And don't forget, get them right on your cell phone. Go to TFNN.com. Hit Tiger TV. We're coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to Nike and see what Nike has to say. So Nike folks, came out. Their numbers were great. I mean, the estimate was 56 cents. They made 73. So no doubt big numbers that the quarter they reported. What they're also reporting, though, is that they plan on missing their future numbers. So Nike posted future orders that missed analyst estimates, renewing concerns that the maker of sneakers and athletic apparel can't maintain growth in the face of mounting competition. I'm not sure if it's mounting competition, folks, or the fact that Retail Sports Authority went bankrupt. Plenty of retailers are going out of business, so they have less places to sell. The orders, a key indicator of demand for the athletic brand, rose just 1% in North America last quarter, according to a statement Tuesday. Analysts had projected a 5% gain. That's pretty intense. Increased competition from Adidas and Under Armour has taken a toll on the world's largest athletic brand this year. That's the writer that's saying that. I'm not sure whether that's factual or not. The shares fell 5% to 52.60. Still, earnings topped analyst estimates. Nike reported a profit of 73 cents a share when they were expecting 56 cents a share. So if we take a look at Nike, Nike right now is traded 52.87. What Nike does have is this, folks. It has a high volume swing low, and it looks to me like that's what it's going to go after. Now, that being said, this is going to also bring more pressure inside the Dow Industrials. So the high volume swing low is $51.47. That was established, I believe, Brexit Day. A lot of these Brexit days, let me see if that was it. So, yeah, it was. So Brexit Day was June 24th. The low that was established in all the markets are June 27th. That's what it's going to go after. So how we go after that's going to be crucial for Nike, because the bottom line, it's been building cars to get down here for quite a while. If, in fact, it breaks it and it has volume, then Nike can go a lot lower. So that's the yin. If we take a look at the yang, Cintas Corporation, Cintas closed at $113.43. That's trading at $117.25 right now. This company here, folks, what they do, they manufacture and market uniforms, restaurant supplies, fire protection, first aid, safety devices. I believe this is in a lot of the restaurants, office buildings, all of the above. The high for the year is $119.94, which was established on September 6th. Right now, this is trading at $117.25. So this looks like it's going to go after its high. Now, this, I wouldn't be buying this. This is what's going on with this equity. This equity looks that it has finished an ABC structure on the way up. If it didn't finish it, it's just about there. What the number is, okay, is is about 120, 121, and it hit 119.94. So bottom line, great numbers. And when you finish a long-term ABC structure on the way up, you'll do a pullback. And this long-term ABC structure on the way up started April of 2014. We take a look at First Majestic for one of the Tigers. First Majestic Silver, the low for the year is $2.40. The high is $19. Right now, this is trading at $10.48. And so you break it lower. Let me see where this is shaking out right now. Okay, so this looks like, quite a few of the other gold and silver stocks. And what it is this. The gold and silver stocks had an incredible run, folks, from January to June. This equity here went from $2.40 up to $19.15. So it was almost a 10-bagger, right? When you have a 10-bagger, bottom line, you can expect a big pullback. If I put this, let me just put this on. Okay, so this is pretty cool. So when you put this on a Fibonacci contraction chart, what you're going to see is that thus far we broke the 50% level of a pullback. Bottom line, what does that set up? That sets up a 0.618 retracement. A normal bull market is going to pull back 50%, particularly when you get monster runs, okay? I want to show you something on this because, my take, if you get the gold report, you know that I'm looking for a full 50% retracement in all the equities. And I'm going to show you why, though. It wasn't just a number that's pulled out of nowhere. Okay, so this equity broke the 50% mark. That means you're going to the 0.618 mark. Because, see, technically, it's hard to even look at this saying, because there's no floors. We didn't have any floors on the way up. It just went straight up. So a 0.618 retracement on this baby gets you down to $9.37. That's down another $1.10. And you're going to see, when you get down there, what are you going to do? What is it going to do? Now, if we go over and we take a look at a few more of them, take a look at Eldorado Gold. Eldorado Gold was the first gold equity that, first off, it did a 0.618 retracement of the move from the highs to lows. But then what it did is that then it got a sign of strength. Now, this was a big heads up for me inside the marketplace because I said, oh, man, this is sweet. Why? Because, number one, you're looking for the retracement. What you don't know is this. After you get a retracement, a large retracement, you don't know whether you're going to get a sign of strength. Well, Eldorado got a sign of strength. It did the full retracement, and this is a vicious retracement. This thing started out at $1.87 in January, went up to $5.15, and then came all the way down to $3.14. Okay? So that being said, I'm looking for more individual equities to get down to that 50 to 75% level. If you look at one of the stronger gold equities, and has been for years, which is Rheingold Resources. What you're going to see in Rheingold is Rheingold, that's G-O-L-D. Rheingold's trading at $100. We take this and we put this, do the exact same thing. Rheingold, when it started its move higher, it was at $60. It went all the way up to $126, okay? So we take a look at this and we say, okay, where are you in the context of a retracement right now? Well, Rheingold got down to a 50% retracement. It bounced, but what happened is this is how you want to, basically, if you're analyzing the whole sector, the gold and silver sector, is a nice sector to analyze. The reason being you can go through about 20 to 25 equities and get a real feeling as to where they want to go. And what the difference is this, folks, is that they're doing the same thing. They're either taking gold out of the ground or silver out of the ground, okay? It's a cut and dry deal. And if you look at Rheingold, well, guess what? We have that high volume swing low the last time it was down in September 2nd. So that's saying that wants to get tested. So this also sets up that, hey, guess what? Maybe this wants to do a 0.618. Then you take that information together and you go into the XAU and the HUI. You stay right there, folks. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, you're going to be able to pick up Andy no matter where you are, right on your cell phone. Go to TFNN.com, hit Tiger TV. Great audio, great video. Let's go overseas, and we're going to have Asia open in another 4 hours. Hang Seng last night was up at 253, trading at 23,571. And that little baby, this is going to be intriguing, too, because we had the downdraft on September 9th. They had it on September 12th. That downdraft, that level there, the bottom of it is 23,914. We'll see whether I can get up into that level. We take a look at, let's go look at Shanghai. Let's see how Shanghai is shaking out. Shanghai last night was up 29.98, and that there, where's that volume? Okay, so yeah, this is going to have a hard time making it through 3,000. But that's going to be interesting because we're right at it. The FTSE over in the UK, that went sideways move out here today, 68.07. That hasn't been able to take out the highs. He had a small expansion of volume. The DAX is going to be the wild card, folks. DAX didn't hold price again today. It held its swing point. But you're pushing into that swing, and you're pushing in with some decent volume. We did 111 million shares today. Deutsche Bank did bounce out here today. Deutsche had hit a low. Let's see. Deutsche didn't break $10, I don't think. DAX. That did, once that bounce did come in inside Deutsche Bank, though, what you did have is that it brought the DAX back. I expect what you're going to see More selling inside that because the DAX deal isn't over. What's good? The next thing we're going to be reading about is the aspect that, okay, what is the fine going to be for Deutsche Bank? You know, right now, the Justice Department is talking $14 billion. So what they were also having to be talking out here today, which was really intriguing, was they had to turn around and start making speeches about why it has taken so long for these fines to come down on the banks. So the Justice Department was out here today saying, no, I'll read you this. This is pretty cool. The Justice Department locked in settlement talks with Deutsche Bank said that several lenders caught up in the long-running mortgage securities investigation had dragged out the government's work by failing to cooperate and have only themselves to blame for the cloud of uncertainty. I believe that too, by the way, folks. But what that's all about is lobbying. More than likely, Congress putting a pressure on Congress that, hey, listen, you know, this thing happened. We're 2016. We're talking about 2007. The banks, Deutsche Bank in particular, doesn't have $14 billion. That's the real bottom line. They don't have $14 billion. But guess what? They're going to get fined, and I suspect there's going to be maybe not that level, but pretty close to it, because what's also going on in Germany now. This is a simultaneous hit in Germany, because what's happening in Germany is that Volkswagen is going to be coming in for a monster hit also. And what the Justice Department is doing right now is trying to figure out what type of hit can we hit Volkswagen with that doesn't put them out of business. You know, bottom line, those negotiations are going to keep taking place. Pretty wild. You stay right there, folks, because our man, Mr. Andy Heck, he's going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night. Have a safe night. Look forward to speaking it right here tomorrow morning, 8 o'clock. Oh, go get them, folks.